Aloha, everyone. Around midday, intraday today on Wednesday, the stock market looked like it was breaking out and was moving higher. And I have to be honest, if it would have held that breakout, that would have been a pretty good confirmation that indeed the market wants to go ahead and V-ramp to new highs. As unbelievable as it seems, that's what it looked like it was going to do. However, as we moved into the final 2 hours, especially the final hour, the stock market averages completely rolled over and sold off all the way into the end of the day, closing at the lows. It was a pretty big, ugly reversal. The only good news is, as you can see on the NASDAQ, volume was not a good news. It's really irrelevant what kind of news it is. Volume was lower than average on the NASDAQ. On the New York Stock Exchange, you can also see that it was lower than average. However, volume was heavier than the session before on both exchanges, so that's a 100% clear distribution day. And on the New York Stock Exchange, you can see that it's basically a confirmation move of the rejection of the 50-day moving average a couple of days ago. The NASDAQ is still trending above it. The Russell 2000, that's a confirmation rejection also at the 50-day moving average. S&P 500, same thing. Dow Jones Industrial Average, same thing. So with that kind of setup, this is now, if you were buying stocks off the recent lows like I was in small size, things have been working, some things have not been working. This is pretty much the sign to knock it off. So all those little piddly long positions I was taking in small size because I didn't trust the bounce that I was taking from those lows, that's pretty much halted. And I really don't have to really force that halt because my CAN Slim and Perfect Speculator scans, the two most important scans, I flagged nothing in either one. Nothing even remotely as close to interesting me in a long position. Maybe USAK if the market moves sideways here. I could see myself maybe getting long this stock if it decides to break out as a Perfect Speculator quality stock. But overall, it's pretty thin out there. But then on the same end, what's even crazier, which is why it's hard to really pick a direction where you want to go with this market right now, my inkling is that the market is leading stocks. Since we just came off those recent highs, if I still had a lot of great looking chart patterns out there, I would say, hey man, there's a lot of good technical strength in individual stocks. This market will probably work out of this and move higher. But right now my charts, they're pretty ugly. There's very few that look like USAK. In fact, most end up looking like APHB, ECYT, with that reversal, CRSP. I just have a lot of stocks that have done this. They were looking good and now they're not so hot, just like HBIO, a recent long. It's moving higher, but where's BOP going? It's going the wrong way. I would think if this market really wanted to go higher and if we would just have better charts, bottom line, and the setups would be better. I wouldn't have my internal indicators going the wrong direction. They would be confirming price. So, like I said, making it more weird, I'm still tracking around 180 long positions on an end-of-day basis. They are all still in uptrends, meaning that they are building a series of higher highs and higher lows. I am still long about half of those positions. No one position is a very large amount of my capital anymore, as trailing stops have been hit on so many names. But not all of those stops have been hit. So as crazy as this sounds, despite today's price action, I only had one legit 100% end-of-day full sell signal, and I'm already out of it. But AIMT, this was the only 100% sell signal of quality positions. Tracking 180 stocks, ugly reversal in the market, yet this is the only sell signal. I'm not sure if my stock picking is that great that I'm only long the stocks moving up, but either way, it's a curious situation. Going back to what I just said though, market is leading stocks. My individual stocks, even the ones I'm long, even though they're trending higher, they do not look that great. So if the market continues to roll over, I can only assume more are going to turn out like Echo, more are going to turn out like AIMT. Patterns like USAK aren't really developing out there, but it's still early. The market can go in either way. But with that being said, with the reversal here at key resistance areas, it's time for another new round of hedge positions. So these are all legit hedge signals from my scans. The first one, DPK, this was in my ETF scan, getting long at 12, cutting my loss, my first loss, with a move below 1144. I'm not sure how I'm going to split the rest up. So we'll see. Ask me in the chat room tomorrow morning and I'll let you know. But for right now, I just know that at least half is going right at those recent lows at 12 and 11.44. The other ETF to trigger in my ETF scan, SSG, ultra short semiconductor. I'm already short or long SOXS, but it's not as strong looking as SSG. SSG is better. They both trade a little differently. Might as well go ahead and move into this one since it looks better. 905 will be my limit. 874 will be my stop. Then there's BZQ. BZQ, 687 my limit. 642 my one and only stop since it's near the lows here. Going to give it room to pull back. SSG, I'll probably end up doing the same thing. I just wanted to get this video lesson out early to everyone, but you can split hairs. You can use this low or this low. I've got to decide how I want to split all these up since they're not coming off the exact bottom. You know, it's not like a bottom signal like BZQ didn't like give a signal like here where it's hitting new lows and then giving a signal off 52-week lows. So a lot of this is going to have to be, you know, some testing out, but either way, if it goes below here, you should probably be all out of BZQ. And then also I have an add signal in SDOW. I'm going to add to my position using an 1863 limit order, and I'll cut my losses on at least half if it moves below 1724 at 1723. I also saw SEF, and since I don't have a position FAZ, might as well do full fair disclosure. I'm going to more than likely take a position in SEF. I would use a limit order at 1139, and just like before, I'd probably cut half my losses with a move below 1123. So if it hits 1122, I would be out of half. But SEF looks like I'm also going to put that hedge in there, even though I'm not listing it as a new long position on the new positions page. But either way, none is going to be too big of a allocation. SEF will just be 1% if I do take it. SSG is going to be 1%. VIXI is going to be the heaviest of them all, so let's get back to that. And DPK will be 1%. So DPK 1%, SSG 1%, SEF 1%, BZQ will be 2%. It made 2 of my scans, so that's how that's going to work. SDOW made 2 of my scans, but it's an add signal, so that's still just going to be 1%. The largest position will become with the one that has the potential for the most alpha. VIXI, this was in my ETF scan, and it was in 2 of my BOP scans, so this will get 3% of my capital allocated towards it. But the most important thing is, if you're a new trader, if you have a small account size, cash is king. If you want only perfect setups in stocks, cash is king. If you only like investing when the market is uptrending and everything is lined up basically where we don't have a lot of selling going on out there, cash is king. So the most important aspect to take from all this, if you're a new trader, cash is king. Do not trade when the market is not favorable. This is not a favorable market right now. Nobody knows what's going to happen, but it looks like on the short term, at the very least, I would think that we need to try to test these new lows. Now, if we find some kind of low in between there and then rally higher, great. I'm going to have to see more green in my charts. Right now, it's not there. So I can't stress enough, exercise caution here. A better tape will come. This too shall pass. But for right now, like I keep saying, cash is king.